All right, let's get right into it. We're going to break down the incredible story of how one of India's biggest, most powerful companies, Reliance Industries, got hit by a perfect storm. We're talking political pressure, media controversy, and full-blown investor panic, all packed into one chaotic 24-hour cycle. To really feel the shock, you have to understand just how high things were. On January 5th, 2026, Reliance was, well, on top of the world. Its stock price hit a record 52-week high, capping off this absolutely phenomenal run.
And you know, the story behind that high seemed like a sure thing. There was this major geopolitical move happening in South America, right? The U.S. getting involved in Venezuela was expected to basically flood the market with cheap, heavy crude. For a refining giant like Reliance, that's like striking gold. It promises a huge boost to their profits.
The optimism was everywhere. You could feel it. But it was also incredibly fragile. The whole story was about to get turned on its head, and it was going to happen so fast, it caught nearly everyone completely off guard. So let's look at how we get from that absolute peak right to the edge of a cliff. It's so important to see just how well the company was doing right before the bottom fell out.
And look, Reliance wasn't just doing okay, it was absolutely crushing the market. A 26% gain over the year compared to the Nifty 50's 11%. I mean, that's more than double the benchmark index. It was a true titan leading the charge. And that stellar performance is exactly what made its sudden, violent fall all the more shocking.
The first crack in the armor didn't come from Dalal Street or some company announcement. Nope, it came from halfway across the world, from Washington, D.C., and it was purely political.
And then, bam, this quote hits the wire. In a very blunt, very direct warning, President Donald Trump put India on notice. The message was crystal clear. The game had changed, and India's energy relationship with Russia was now square in the crosshairs. That sent a huge wave of anxiety rippling through the entire investment community.
And the sheer scale of this threat was just enormous. We're not talking about a small tax here. There was a proposed Sanctioning Russia Act that carried the potential for duties as high as 500%. This wasn't a warning shot. It was a potential economic nuke, forcing investors to immediately rethink their risk and triggering that classic flight to safety.
So just as the market was scrambling to figure out this massive political risk, a media firestorm erupted, basically pouring gasoline on the flames and targeting Reliance directly.
A really damaging report comes out from a major outlet, Bloomberg, saying Russian oil was, at that very moment, on its way to Reliance's refinery. Reliance fired back hard and fast, calling the report blatantly untrue. So now you've got this classic he said, she said situation, leaving the market just swirling in uncertainty and panic.
And here's the thing. In a high-stakes environment like this, the facts almost become secondary to the perception of risk. It didn't really matter in that moment if the Bloomberg report was true or not. The damage was done. The mere association with potential sanctions was toxic.
So this perfect storm of political and reputational risk, that was the signal the big money players were waiting for. And it triggered the very next domino to fall, the institutional sell-off. In what was a huge move, the global brokerage CLSA made a very decisive call. By dropping Reliance from its widely followed India model portfolio, it sent this powerful signal to all its clients and the market at large. It's time to get out.
But that money wasn't just disappearing. It was being moved strategically. Capital was flowing out of the perceived risk of the energy sector and into safer, more defensive bets like consumer goods and IT. So you saw names like Nestle and Tata Motors actually benefiting from this rotation.
The impact of this institutional shift was immediate and just overwhelming. A huge wave of sell orders flooded the market, causing trading volumes in Reliance stock to explode to 6.5 times the 30-day average. This wasn't a slow leak. This was a stampede for the exits. And here it is, the brutal bottom-line impact of that stampede. From a peak of over 1,611 rupees on January 5th, the stock just plummeted to a low of about 1,523 rupees the very next day. That's a drop of almost 90 rupees per share in a single trading session. Ouch.
Okay, so let's zoom out a bit and look at the broader economic pressures that were just making this whole situation worse. Not just for Reliance, but for the whole Indian market, and then think about what could happen next.
At the very same time all of this was going down, the Indian rupee was getting weaker, crossing that 90 to the dollar mark. A falling currency just adds another layer of pressure, especially for foreign investors who see the value of their Indian holdings shrinking in dollar terms.
And that pressure was really starting to show. In just 2 days, foreign institutional investors, the FIIs, pulled a massive 7,608 crore rupees out of the market. And when they need to sell fast, they sell their biggest, most easily traded stocks. So Reliance, being a market heavyweight, basically became an ATM for them to get their money out quickly. So after this total cascade of bad news, geopolitical threats, media drama, institutional downgrades, and macro pressures, the big question on every single investor's mind is, what now? Can this giant of the Indian market actually absorb a shock like this and get back on its feet?
The path forward really hinges on a few key things. All eyes are going to be on the company's upcoming Q3 results to see if the core business is still strong. Then there's the constant buzz around that massive IPO for its digital arm, Geo, which could unlock huge value. And of course, everyone will be watching Washington for any news on tariff policy and just keeping an eye on global crude prices. It's a powerful reminder of how connected everything is: global politics, the media, and big money. The storm was sudden and severe, for sure, but this story is far from over.